If someone steals money from your bank account through a digital fraud, what if the bank and RBI paid most of it back? That's exactly what Reserve Bank of India is proposing. On March 6, 2026, the RBI released new draft rules to protect victims of small digital banking frauds. Under the proposal, victims could receive up to 85% compensation for their losses. But there's a limit. The refund is capped at 25,000 rupees per incident, and the fraud amount must be 50,000 rupees or less. This applies to frauds involving UPI payments, debit or credit cards, and net banking. Even if the fraud happened because someone accidentally shared an OTP or got tricked by phishing, they may still qualify, as long as it's a first-time unintentional mistake. To claim the compensation, victims must act very quickly. You need to report the fraud within 5 days. First, inform your bank immediately. Then, report it to India's cybercrime system through the National Cybercrime Reporting Portal or call the Cybercrime Helpline 1930. The interesting part is who actually pays the compensation. About 65% of the amount will come from the RBI using its Depositor Education and Awareness Fund. The customer's bank and the receiving bank will cover the remaining share. Banks will also be required to process claims within strict timelines, or they could face penalties. This rule is designed to restore trust in India's fast-growing digital payment system, especially with the rise of UPI fraud and online scams. The scheme is expected to start on July 1, 2026, but the RBI is currently seeking public feedback before finalizing it. If approved, it could become one of the biggest consumer protections in India's digital banking system. For more important finance and global business updates, subscribe to Pashunath Finance News, where we break down big money stories in simple terms.